So the Treasury here in the UK has warned that UK taxes are going to rise to fill in what's called a fiscal deficit of £50 billion. Well, I don't think that's any kind of surprise whatsoever, but what exactly does it mean? What is a fiscal deficit? Why is 50 billion quite a significant figure? How does it translate to us individually? And what are my top 3 predictions in terms of which taxes are going to rise come November the 17th in the autumn statement? Stay with me. And there's a very good article I found that was written in the BBC on the 1st of November. Treasury warns of tax rises to fill financial hole. Everyone will have to pay more tax to put the UK's public finances on a sustainable footing. Well, there's no surprises. Fiscal black hole again reaffirmed at around about 50 billion. How much? How do we actually put that into perspective? Bear with me. I'm going to explain that. And there is going to be a autumn statement to be delivered on the 17th of November, which will lay out the potential tax rises, or the tax rises. They will come, that's for sure. And also the cut in expenditure. And the Daily Telegraph has reported that Mr. Hunt is planning to fill the budgetary shortfall through a combination of 50% of tax rises and 50% cuts to public spending. But what of these tax rises that are likely to take place? First and foremost, what exactly is a fiscal deficit and why is 50 billion such a significant figure? Well, allow me to explain. If you run a household or a part of a household, for example, then you'll have income coming in through your earnings, maybe employment, self-employment, dividends, whatever it may be. And then obviously outgoings, which is your expenditure. Now, let's say your income is 100, your expenditure is 98, then you'll have a surplus of 2 every month or every year. Let's make this on an annual basis. Now, let me flip the scales a little bit. Let's say your expenditure is 200 and your income is 150. Well, ultimately what will then happen, you'll have a deficit every year of 50. And the chances are the way you will make that up is through borrowing. And that's exactly what the government does. Its fiscal deficit, if I was to put it into a formula, is simply total government expenditure less any government receipts. And receipts can be made up through tax revenue and borrowing. But the fiscal deficit is really expenditure minus tax receipts, excluding the borrowing part. Well, quite simply, just like your personal household budget, it's really unsustainable. Sooner or later, you're either going to have to cut your expenditure or you're going to have to raise your income, and the government will have to do the same. Otherwise, you're going to keep borrowing to fill the gap, and that means more interest payments and more pressure further down the line. You're just kicking the can down the line, and the markets eventually will react adversely to that. So the next question really is, why is 50 billion as a fiscal deficit so significant? Well, here's a piece done by commonslibrary.parliament.uk, a bit of research, and it's saying in the 20 to 21 year, the fiscal deficit was equivalent to 14.8% of GDP, which is a peacetime record. And we know why that is, because of the coronavirus pandemic. So it's never been so high. And how does that break down to us individually? Well, an estimate would be if we had to plug this 50 billion hole for every tax-paying individual, employed individual in the UK, plus the self-employed, it runs to an estimated £1,250 to £1,500 per annum per individual. That is how much extra tax we would have to pay annually in order to plug this gap. So what are the taxes that could potentially rise in the autumn statement come November the 17th? Remember, the Chancellor, Jeremy Hunt, and the Prime Minister are going for a 50-50 ratio here. 50% tax increases, 50% current spending. So that means mathematically, if I do the arithmetic, it's 25 billion, which is the portion which will be addressed by tax rises. And if you look on screen here, this is the public sector current receipts of 21-22, £916 billion. And this is actually published by the commonslibrary.parliament.uk. The link is up there. You can go there and see this for yourself quite easily. And you will see the top 3 tax revenue receipts of the government is income tax, national insurance contributions, and VAT. They collectively, I think, make around about 50% of the total receipts. So on screen is a really, really good graph. I found a very good graph that got published by the telegraph.co.uk, and it's titled Where Hunt, Jeremy Hunt, that is the Chancellor, could increase taxes come the autumn statement on November the 17th. Now, it really does depend on what they're trying to achieve. And as we know, there's a 50 billion deficit, of which at least 50% is going to be made up or plugged in by tax rises. So it's a really good scale here. You can see at the bottom of billions of pounds. The source here, Resolution Foundation. So attribution to them, all credit to you guys. This is not my work, this is theirs. And it goes through some of the possible taxes or the areas where taxes could rise and what the actual revenue it could bring in. And the first one here is the health and social care levy. Now, as you remember, as part of Rishi Sunak's budget, this was 1.25% that was going to be levied. And I think it was going to be effective April 2023. And now that's kind of been reversed by Jeremy Hunt's mini budget. So that's not going ahead. But if it is, you can see the potential impact. It could almost be clawing around about 15 billion back. The 1 pence income tax rates rise. Now, I don't think that's going to happen in the autumn statement at all. I don't think it's politically viable, simply because there's been a U-turn on the cut to 19 pence from 20 pence in the pound, and to raise it to 21%. Again, I just don't think it is actually palatable at this stage. And there's a host of other ideas here, which you can see on screen. But I think one of the issues that Rishi Sunak has is income tax and national insurance contributions. As we saw in one of the earlier graphs in this video, they're the top two contributors to government tax revenue. And I think by tinkering even more with them could become a bit of a political issue for him, given there's a looming general election come either next year or early part of 2024. So what do I think is going to happen? Well, here's my take. First thing is, I think there'll be some sort of VAT change. Now, I'm not saying the headline rate of any way, shape or form, but I think they'll be tinkering around VAT, value-added tax, which is an indirect tax. And you can see here, private school fees, VAT is one of the areas where VAT will be applied to private school fees. It isn't at the moment, it's exempt, but they will apply VAT. And I think that will happen to other classes of income or revenue or whatever it may be, VATable suppliers, shall we say, is the right word in that respect. And I think there will be more on VAT to try and sort of get some money back from VAT. So that's my first take there. The second attack, I think, is going to be on capital gains tax, which is seen as a bit of a wealth tax. And if we go back to these tax statistics, you can see here, VAT is number 3, capital gains raises around about 41 billion. So it's not the biggest. So what the autumn statement is likely to have is a combination of tax rises in these other areas, capital taxes, VAT, fuel duty, council tax, whatever it may be, to try and sort of bring in more tax revenue to fill in that fiscal gap. And capital taxes is the next one. It could be either a freeze or reduction in that personal allowance, and a controversial one, but I'm going to put it out there, maybe the 20% rate of capital gains tax will increase to closer to maybe the income tax rate, the high income tax rate of 40%, maybe not hitting 40%, but in that direction, if you catch my gist. As always, thank you very much for watching this video. Your support is so appreciated, and I really hope it gives you some value, some golden nuggets. Please like if you did like the video, subscribe, and the bell notification icon is very useful. And until I see you on the next video, please keep well.